This is Fintech Insider News. This week, according to the BBC, Revolut has been named in more fraud reports than any other major UK bank. JP Morgan is eyeing up expansion in Africa. And banks behaving badly. Two major banks on both sides of the Atlantic are hit with huge fines. We'll be discussing all of this and more on today's show, so don't go anywhere. Hello and welcome to episode 907 of Fintech Insider. I'm Laura Watkins, Director of Media Marketing here at 11FS. I'm joined this week on Fintech Insider News by some great guests who are here to break down the biggest stories from the past week in fintech and financial services. First up, a warm welcome back to my co-host and 11FS colleague, Dave Morris, Global Head of Technology at 11FS. It's been 2 whole weeks since we last did a podcast together. How have you been?
I'm good. Yes. No, it feels like a news week that is a treat to talk about.
Yeah, we just bring you back for the juiciest stories, Dave. That's the key here. Next up, making their Fintech Insider debut, we have a warm welcome to Fintech Insider for Inna Lyubashevskaya, Chief Customer Officer at Sumsub. Welcome to the show, Inna. Can you tell our listeners a little bit about yourself and what you do at Sumsub?
Hi, everyone. Thank you for having me here. It's my first podcast, so I'm happy to participate. So in a couple of words, Sumsub is full cycle verification platform built on in-house technology, and we help businesses to prevent fraud and stay compliant with regulation. So we working mostly with crypto and fintech, and now we have a lot of customers from different industry, like global customers. And we focusing previously, when we just launched the company in 2015, on verification of customers and businesses. And now we're providing like the full cycle solution, which help to prevent fraud on each stage of client working with the business, within like working with bank and or with a marketplace, for example. And my role in organization is Chief Customer Officer. So I'm responsible for the implementation and onboarding stage, as well as customer support and service. So the idea is to make them happy and satisfied with the product they subscribe on.
Amazing. Well, thank you so much for joining us. That experience is going to come in super handy for the stories we have lined up for today. And thanks for giving us your podcast debut. I'm excited to get your thoughts on all the stories today. And completing our lineup today, we have another Fintech Insider debut. Welcome to the show, Kimberley Abbott, founder and CEO of Vested Impact. How are you today, Kimberley? Can we also hear a little bit about yourself and what you do?
Yeah, thank you for having me. And as you said, my name is Kim. I'm the CEO and founder of Vested Impact. We are an ESG and sustainability data platform. But what we do, which is quite different, is we assess the material impact that the products and services that companies offer have. And we do that using 200 million academic papers and over 100 million impact data points. So what that means is, we might look at, instead of do companies, hire diversity or do they pay their staff well, we're actually looking at what is the impact of delivering, affordable financial products. What does that have downstream? And conversely, what are the risks that come with either disposing of your waste or all the things around that? So I think that will also have some relevance to some of the discussion later on in today's episode.
Yeah, absolutely. And as you say, let's jump straight into it and get started. So our top story this week, quote, I lost £165,000 to fraud in an hour. And that's a quote from a customer who says they were let down by Revolut. This is a story led by the BBC. A Revolut business account holder lost £165,000 to scammers, claiming that Revolut's security measures failed to prevent the theft. The company has so far refused to refund the money. Fraudsters bypassed ID verification and tricked the customer, codenamed Jack, into approving payments by posing as Revolut staff. It then took Revolut 23 minutes to freeze his account, during which time more funds were stolen. An investigation by the BBC has found Revolut has been named in more fraud reports than any major UK bank, with nearly 10,000 complaints versus the next on the list, which was Barclays, who had 8,000, raising concerns about its fraud prevention systems and customer protection. Despite having recently gained its UK banking license, Revolut is under scrutiny for its handling of fraud cases, with critics pointing out a high-pressure work culture focused on growth over security. So there's a lot to take in there. Ina, I'm going to come to you first as our fraud expert. You were quoted in many places saying that you thought corners had been cut here. Could you tell us a bit more about that and your reaction to this news?
Yes, I think the important part of this news is not particular Revolut. It's more about that someone can bypass the ID verification and get the access to the account of the check. Yes, and I would suggest to look like a bit beyond this situation, talking about industry like fintech and classic banks overall. And so, but if they're ready to the AI type of fraud, to the new type of fraud. And Revolut case is not the only one we see on the market. There was several cases during this year when big sums and big funds were stolen from customers' account in banks and in crypto, for example, as well, by when criminals were using AI to fake the identity. We call it account takeover type of fraud. And we believe that it is a huge on the market right now. By our internal research, we know that increase of fraud cases this year, last year versus previous year, were 700%. So we see this is like the big trend on the market overall. And the second and third place in this research of BBC is allocated for classic banks. So it is Lloyds and Barclays, which mean that it is a problem for neobanks, like new guys on the market, and for organization, which were in the market for a long time. And when we're talking with the client, and I'm doing this a lot, and we're talking about fraud and anti-fraud solution, there is no simple answer how to avoid these cases and these situations. And there is no one solution. And when I'm talking about that angles were cut and that probably Revolut didn't implement some processes, miss some processes at the point of time, it means that every player on this market need to think about layer solution. That's how we think about this. And we suggest the market and discuss it with the market in this way. So we suggest to do to use verification and different transaction monitoring approach, which is a layer on a different stage of customer journey, which help to red flag activities which were investigated by BBC, like these multiple small transactions. It definitely red flags. And new account and new device, it is a red flags. So certain activities need to be implemented by bank to postpone the payments or stop them and implement certain procedures, talk to the client after freezing, proactively freezing the account, for example. This is one of the thought. And so I would look at this bit beyond the Revolut themselves. It's more like a global industry problem, this new type of fraud.
And Dave, in your view, as Ina sort of suggests, that Revolut aren't alone in this, and they have been sort of victimized in this particular investigation by the BBC, but is something in that in terms of Revolut could have done better in this situation?
Oh, definitely. And I think if you look at some of the numbers, Barclays were, significantly behind, still a big number, you're looking at 8,000 versus 10,000. But what you have to take into account is that they have more than double the number of accounts going on in that scenario. So as a percentage for Revolut, it's a huge number. And I suppose it's similar to when we talked about the Starling onboarding fines a couple of weeks ago. Is this a race for them, from Revolut's perspective, to get to revenue and get to where they want, that has led to them cutting some of these things? The bit that really stood out to me was the inability for this guy to be able to get his account frozen, which kind of screams two things. It means that they don't have the support capability backing up to allow people in that scenario to get to someone quickly to be able to block this, and they don't have an automated monitoring piece that is actually spotting trends like this and blocking proactively ahead until they can actually talk to someone to say, is this okay? Can we unblock it and let it go through? It seems that the onus that they left was very much in the hands of the consumer on that side, which, when you're in their position and desperately pushing towards getting your banking license, you've got to think the FCA are going to be looking very long and hard at this situation and wondering, is this the level of consumer duty that they want someone with a UK banking license to be running through?
Yeah, absolutely. And Kimberley, I'd like to bring you in sort of on that broader point of made around this being kind of a continual problem that the industry is facing. But obviously this is a huge name, a sort of fintech superstar in the UK scene that's sort of topping these charts. What do you think that says about the sort of image perception of fintech at the moment? Is it damaging, or is it only damaging to Revolut?
I wouldn't say it's particularly damaging, because I wouldn't say it's particularly new. I think you and I both say in saying, financial crime and illicit flows of money are not unique to Revolut. They're definitely not unique to the UK as an ecosystem. And at vested impact, we assess the risk and the impacts that companies' products and services will have on illicit flows of finance. There's actually a UN Sustainable Development Goal target specifically on getting governments globally to work to reduce them. Target 16.4 for anyone who's interested. And so I think just on some recent research we did, which we might discuss later in terms of the impact of fintechs on some of these global issues, we did find that about 42% of fintechs in the UK, we looked at about 3,500 fintechs and the underlying kind of products and services they deliver, and about 42% of them are actually positively impacting reducing financial crime. So I think there is a good story here, but more does need to be done. I think Dave did touch on, I think we did find fintechs do tend to be, or they did come across in the data as more risky when it does come to seeing the negative impacts of this. It is a hard leap for us to make, however, because when we look at the traditional financial institutions, some of them have gotten so good at handling financial crime because they are working with fantastic fintechs. So it is hard to split the two and compare it. But I think the overall thing also we need to consider, and that we saw in some of the data, is financial crime isn't just the purview of the financial services sector. It's becoming such a cross-cutting solution or cross-cutting problem, because we do see financial crime being fed through social media platforms, through telecommunications, right, and mobile platforms. And I think it does actually just raise up that this is more than one company and even maybe more than one sector to try and solve this problem.
Absolutely. And then on that kind of like solution piece, and sort of to do with Dave's point as well, what do you think happens now? Do you think we'll see an increase in regulatory scrutiny on Revolut in particular, on the industry overall? What do you think happens next?
I think Revolut is applying for license, and they've got like this provisional license. So I think that all eyes will be on them right now, and the regulator will check them for the next several years, and to make sure that the necessary processes and tools were implemented to remove the risk, to minimize the risk of this case to happening. However, I believe that the responsibility should be shared within all financial organization, NFC, and the government. And when I'm talking about responsibility, I'm talking about education of the customer, because we can implement all possible solutions, processes within the organization. However, if we, as an industry and regulator and the government, are not educating our clients, customers, saying this proactive calls from banks is probably not possible in real life, that this is the examples of fraudulent activities which we recently see in the market. So people to be aware of these cases and this type of criminal activities to help to minimize those in the future. So that's I think very important.
Fantastic. And Dave, we're nearly out of time on the story, but like to wrap this up, what comes next? What else do you think we may have missed on this particular one?
I think for Revolut, obviously they're in their mobilization stage, which is going to be a minimum of 12 months. Now, whether that means that gets extended or the FCA put specific provisions against them on this, I doubt it, because this is common. This isn't unique to them. Yes, it's a big headline. Panorama seems to have gone very tabloid in some of the things they're pushing, but I'm not sure they dug that deep into some of the topics around this. They went for the headline as opposed to what was the really underlying challenge here for the banks and the industry as a whole. They definitely
really pushed it as well. Like it was like, on top of the BBC homepage, I got BBC News breaking news notification. I'm not sure it quite deserved that. They were really, really pushing this story. So they were really trying to cast a shadow over Revolut, at least in how they publicized this story. So they clearly wanted it to have an impact, but as you say, more on the sort of sensationalizing side, perhaps more so than the kind of deep investigation into the numbers and the best practices around scams and so on. Which actually isn't the first time. They did that as well on Monzo a good few years ago about exposes on closing accounts due to AML reasons and not Monzo not giving a reason why, but they don't have to according to AML guidelines as well. But again, that was done in a kind of expose sensational way, which can sometimes have a reputational knock-on that seems a little unfair.
Yes.
But if I may add here, from the reputational perspective and the spotlights, it's like recent news was the Starlight Bank with them breach in AML regulation. And it's also, maybe it wasn't in the BBC particular, but it was everywhere. And maybe it's also related to this new APP regulation and reimbursement laws, which was, I think, started to be live on 7th of October. So I think it is to emphasize the importance of this new law to the market.
Yeah, that's a really good point. Just sort of, this is important. You won't get away with skipping steps on this. Which actually takes us on to our next story. So in the interest of balance, we've just had a story about a fintech behaving badly. Now we're going to talk about a couple of banks. So firstly, we have TD Bank fined $3 billion after money laundering guilty pleas. That story is in Finextra. And likewise, woeful, quote, systems and staff incentive schemes land TSB with £10.9 million penalty. So two different banks from both sides of the pond have received heavy fines this month. Canada-based TD Bank received a whopping $3 billion fine after pleading guilty to violating US anti-money laundering laws. Systemic failures in their AML controls allowed criminals to exploit TD Bank's services, with $18.3 trillion in transactions going unmonitored, including domestic ACH, check transactions, and P2P payments. Meanwhile, the UK's TSB Bank paid a £10.9 million penalty, which seems a lot smaller than $3 billion in comparison, to regulator the FCA, who found that their processes from 2014 to 2020 were inadequate, with staff potentially incentivized to push unrealistic repayment plans, neglecting individual customer circumstances. So again, a lot of detail there. But yeah, let's start with TD Bank. There's a big old number there. What do you think, Dave, the immediate implications of this fine might be?
Yeah, it is a big old number. The US regulator and Department of Justice like to put big numbers in. I remember a sanctions breach in 2014 was just shy of 9 billion that BNP Paribas paid out on there from that perspective. So the numbers are very big on doing something wrong with the US dollar always. But then the scale of the numbers underneath are huge from that perspective. You know. Two very different things in these two banks. For TD, lacking real monitoring of transactions across very large parts of their network, and continually when they grew, they pushed out new capabilities and new products without having the monitoring in there, which effectively some of the sort of feedback and the sort of report that came out from the Department of Justice of effectively open season for criminals to be able to transfer money around on their networks, and so you can see why the numbers are so big, and certainly the US government takes very seriously the control around their currency, and they don't, fin crime is a big deal from their perspective, and they don't want to see that going on with US dollar because they want to keep it as the de facto currency for the global financial industry. So, big gaps from TD.
Yeah, $18.3 trillion unmonitored is mad, of which there's a stat here that says more than $470 million of that went into drug proceeds, funding networks in Mexico and China and other places, all kind of related to this sort of fentanyl crisis, which equally then pipes back into US society. So, it isn't the fine isn't really the story, as you say. It's like what is going on with the money that is being kind of mistreated and what it goes on to do. What was your thoughts on this? Like, if people knew what these crimes were funding, would the bank be more alert to it? What are the kind of longer term implications of admitting to just unmonitoring a ridiculous amount of payments?
So I made as a product, like anti-money laundering checks is one of the has the most demand, especially from the financial institutions and banks. And I believe, I'm not aware of I don't know details of this particular case. However, it's influenced the whole market and raise the awareness and necessity of these checks and this regulation to be implemented and controlled by the regulator. So, the cases I think which were involved in TD Bank from 2014, pre-old cases, and it happened. And I believe in that period of time, this check wasn't digitalized. It was pretty hard to proceed. It's not removing the guilt from the bank. However, right now we have multiple instruments, and this check is obligatory for any financial institution. And sanction list and PEP list is something that companies implementing, checking. And for example, the Sterling Bank, which I mentioned before, they had the same issue. It's IMA regulation broken, basically. And they were fined on £28 million, I suppose, because they didn't check clients versus US sanction list. So they only use UK sanction list. But if you're working globally, this is the rules which you need to implement. And it's again, like no bank, it's a new bank on the market, and they confirmed and they promised to make some changes, which is good sign for the market. So it was noticed, and some measures will be implemented.
And I think the same was true of TD Bank as well. Like the CEO said, like, this happened on my watch. I'm really sorry about it, etc. Is that enough? I don't know. Can you just apologize for not doing something, or like
you got to question his position, but the Department of Justice in their statement said that the bank made a conscious decision to choose profits over compliance with the law. So it's a fairly damning statement the other way, and so ultimately that choice is going to cost them billions of dollars of profits back the other way in fines, but probably a dip in the ocean on profits of a bank the size of TD.
That's very true. We're talking about big numbers, but we haven't talked about like the overall rate card. I'm sure they're probably fine. Kimberley, you were kind of nodding there. What's your kind of thoughts on this one, and maybe the kind of bigger picture about actually looking after customers?
Actually, what you said earlier about, is it a bit too sensationalist what the BBC has put out about Revolut? I think this is the example of why it's not, actually, because, anti-money laundering left unchecked results in what you've just seen happen with TD Bank. And I think it's easy, sometimes to always depersonalize it, right? We think of individuals just, unfortunately, getting scammed or losing out on small bits of money. But the reality of the TD case here, as you mentioned, is, hundreds of millions of dollars was very easily tracked to show that it was going to drug games, and drug crime and things like that. And I think, we say, like, would people view the banks differently if they understood what these money laundering actually funds? I really hope so, to be quite frank. But I don't think the banks really think enough about what it means when they aren't paying attention and properly complying with anti-money laundering. My background is the UN. I used to work in peacekeeping. And, money laundering funds conflict. It funds crime. It is a huge thing that we can do to create more peaceful societies. So, just on a personal level, I think we need to make sure that it is looked at as an issue that affects our societies beyond just scams that, help individuals.
No, that's such an excellent point. And then by comparison, the TSB fine, obviously a slightly different issue and a slightly smaller scale. But they were sort of accused of incentivizing staff to push financial products potentially onto vulnerable customers that they weren't right for the product that was being pushed on them. That doesn't feel great either in terms of looking after vulnerable customers. What can be done to kind of overcome that, Kimberley?
Just back on some of the data we see. So we have the data on kind of, as I said, over 3,500 fintechs in the UK. And I think, unfortunately, one of the large or negative impacts you see on inequalities and poverty is actually over debt to vulnerable individuals. It is offering them the wrong products or over lending. And that can have devastating effects on people. And it can make people that were maybe only slightly vulnerable, far more vulnerable. Just on some stats, we saw 75% of fintechs have an impact on access to finance. Now, access was always seen as the first step of financial inclusion. But the reality is they need to be access to the right products for the right individuals, which is where TSB has kind of fallen short. And we saw only 39% of fintechs actually really kind of do financial inclusion, as we would call it properly. But probably the harder bit was 15% of fintechs are actually only really properly addressing the bottom tier of vulnerable individuals to what we believe in a significant way. So there's 7.4 million people in the UK that are facing financial difficulty in January. And I think, we are facing a crisis where we need to focus more on it's not just access to finance, it's access to the right products. And it is about providing them in a responsible way, which TSB has clearly been kind of fought out for, and rightfully so.
Yeah, absolutely. And like you say, it's all about getting access to the right finance. And sort of as a result of this, they've also separately agreed to pay a 99.9 million fine to also redress mortgage, overdraft, credit card, and loan customers who were affected. So they've had to pay compensation. To Kimberley's point about kind of lasting impact and sort of, making financially vulnerable customers more vulnerable, is compensation schemes enough? Does that solve the problem or not really?
I think, particularly in this scenario, these were the customers who were in arrears. They had taken out loans, credit cards, overdrafts, and these were probably the most vulnerable customers that the bank would have. They're people who are not only are lending, but they are in arrears on those loans and those products. And ultimately, at the heart of most of the sort of consumer-facing side of the regulation, and it's been increased, again and again over the last couple of years, is about treating your customers fairly. And if you're going to, incentivize your staff to push certain types of products, your staff will do that because they themselves will want to be incentivized and they'll want to get those things. But we've seen this again and again through incentivizing staff in a way with all of the the car loan issues that have gone on, the mortgage issues for Lloyds and things like that backwards. And this just seems to be a repeating cycle that banks aren't putting the sort of duty of their customers, particularly their most vulnerable customers, at the front of the conversation. And you've got to think this. The most important part of this is actually paying compensation to the customers, not the fine. But is it enough? Don't know. Probably for those individuals impacted, it will help, but it's probably a very long way forward from the point that impacted them, because some of these were quite a few years ago.
Yeah, definitely. The earliest one was 2014. That's 10 years ago. Like, is the compensation now going to actually fix the debt that you got into and the consequences
and the
of that?
impact
Yeah, exactly. Perhaps not, but as we say, the fines and the headlines are worth raising awareness of this. So hopefully, better behaviour follows. And on that note, we're going to just take a quick pause here. Back very shortly. Welcome back. Before we get back into the news, we wanted you, our listeners, to know that we're currently running a survey to get your feedback on all things FinTech Insider. This is your chance to help us shape what the podcast looks and sounds like going forward. So head to 11fs.com/survey right now and tell us what you'd like to hear more or less of in upcoming episodes. That link again is 11fs.com/survey. And right, back to the news. So our next story is that UK fintechs have an overall positive effect on the country. And the story was in Finextra and many other places. So research from Innovate Finance and Vested Impact surveyed financial institutions and 3,560 fintechs using the UN Sustainable Development Goals as a framework to analyse their impact. The report found that 98% of fintechs improve productivity in the UK, 39% are increasing and promoting financial inclusion, and 26% are dedicated to protecting data privacy. There is more work to be done on fintech's impact on the planet, with only 10% driving a positive impact on the environment and 73% negatively impacting the planet. However, the negative impact has dropped 13% from last year. 14% of fintechs have been positively impacting their communities, with only 3% having a negative impact. Lots of numbers there. So who better to ask about this than yourself, Kimberley, CEO of Vested Impact, who put this report together alongside Innovate Finance. Can you tell us a little bit more about sort of maybe why this report exists in the first place? It's its second iteration. Why is it so important to kind of to analyze fintech's impact, and particularly why against those kind of UN development goals?
Absolutely. So the report actually was first done last year. We did an iteration of it last year, and the intent behind it was it's very easy often to talk about a sector, right, or an industry in terms of how much money it generates to the economy and how many jobs, which is fine. That is a very relevant and they're useful factors, but they don't often capture the full impact that, for example, fintechs have on our daily lives, right? What matters to us, and to a bigger question than that, what matters towards the problems that, impact us or matter globally, which is what the UN Sustainable Development Goals. So the UN SDGs is a very quick for someone, for those who do not know, they are the only globally agreed framework. They're adopted by all countries, which agree to what are the kind of 17 main goals the world needs to solve and achieve to kind of create a livable planet, a livable society, a fair and inclusive one. So the 17 goals, 170 odd underlying targets, and they cover everything from, as I said, inequalities, gender, peace, poverty, all those things. So for us, it was looking at fintech to kind of go, it's not just about, the jobs they create, but actually of those sustainable development goal targets, there is nearly half of those that are linked to finance. You can't get access to healthcare, for example, in some countries without money. Women are still paid less. So there is gender, tied to finance. So that's why it was interesting for us to, alongside Innovate Finance, and also in partnership with Accenture, to kind of do this report so we could create a better picture of what's all the good fintech is having in the UK, but also where there's still work to do. Because the reality is, many of these SDG targets are not on track, not just for the UK, but other countries. So it was really about how do we get the full picture of the role that fintech as an industry can have in our lives, but also in the UK.
And were there any surprises in the numbers? Were they sort of roughly what you'd expected? Obviously, having done this once before, some of those numbers went up or down, but in the way that you'd expect, or was there anything that was particularly surprising to you?
So one good thing, so at Vested Impact, as I mentioned earlier, what we do is we take in information about companies and we break down the underlying products, services, and activities they deliver. So when we would look at different banks, we're looking at the different products, we kind of used AI and data to pull that in. We used over 200 million academic papers, which helps us understand how do we know if cryptocurrency, for example, is risky or maybe it's not. And then we use over 100 million impact data points to help us really quantify what that means in terms of so how many people do have access to bank accounts, how many people are in debt. So when we looked at all that and you look at it across, we also have that data on over 2 million companies, which includes other sectors. So when we look at how it stacks up, I think it is what we expect. Fintech scores pretty well in comparison to other industries, ones like construction or things where, there's a lot of negative impact from waste. It doesn't score as highly potentially as ones that like telecommunications or education that are so integrated into kind of basic things. But I think what we'd expect with fintech is we do see them very slightly overall having a positive impact higher than, capital markets or more traditional banking. That comes about because fintechs can often be more agile, which means they can more properly often meet the needs of specific groups and groups on the ground. They can quite simply adapt better to the needs of the bank. So we do see that. That was probably not surprising to see, but it does explain why fintech does come out relatively good in comparison to other industries.
Amazing. And was there anything that sort of stood out to you? I think 26% of fintechs are contributing to the protection of fundamental freedoms. That was their impact on peace. However, that came with a caveat of it has seen a decline in their positive impact on addressing money laundering and illicit flows of money, which probably this show in and of itself is testament to. What was your kind of thought on that?
So we're happy to hear that fintech have a positive impact. And from our side, we're also trying to think about the topic of the impact of to the industry. And we recently launched a new initiative. So I'm not sure if you read about this. We call it Green Flag. We literally launched it last week. And I think it's very related to the Kimberley's topic. So basically, based on our research, we identified there are a lot of people in the world who doesn't have access to the digital world, and because of the different reasons. And we realized that it's about 600 million the people, which, if it's possible, it could be potential the third biggest country in the world of people who doesn't have access to healthcare, medicine, education in a digital world. And basically this initiative is what we're trying to do is we're trying to give the access to the people who doesn't have the ability to use digital service by certain reasons. For example, it could be medical issues. It could be ID issues or country of origination. So people after car accidents whose face changed, or after surgeries, or people from the restricted countries for the some industry could be high risk clients. What we're trying to do in these initiatives, we try to identify these individuals, and we're trying to give them ability to pass the verification and have access to the digital world. It's different initiatives from our side as a verification platform. So we're trying to help, trying to participate in this all like fintech positive impact on the global world. I don't know. This is literally like brand new stuff.
Amazing. Exclusive. I love it. And Dave, obviously there's sort of no getting away from the fact that the sort of impact on the planet is still the biggest concern and the weakest area. So the numbers say that only 10% of UK fintechs are driving a positive path for the planet. However, the amount negatively impacted has gone down to 73 from 86, but that's obviously still a very high number.
Yeah, it doesn't surprise me that particular number. I don't know exactly what that score is looking at. I would imagine a lot of it is the technology burn on some of those, particularly the crypto
Kimberley's nodding.
areas and things like that. But that's only going to go up beyond crypto when you start seeing more AI coming in and things like that. I think there's an opportunity for the finance sector to work with people like the big tech players, the Googles, the Microsofts, and that to think about how we can green some of the compute. I know there was an interesting piece that came out from Google this week about starting to look to invest in nuclear power for their data centers to be more sustainable in the way they are, to start to think about those sorts of things. So you can see if you start to join up some of those things where that trend. We've got to get better about how we use things like some of the big data center costs and things like that from a planet perspective. But that I can't see that going anywhere other than the wrong direction at the moment with some of the things that are coming through with, increasing use of AI and to do the smart things that fintech want to do is relying on those things.
And it's not something that fintech can solve by itself. I think one of the main findings of the report was the need for cross-sector collaboration. Kimberley, can you tell us more about that kind of finding and how we sort of make that happen?
Yeah, I think it's the sector, but it also can even stay within financial services. One of the biggest impacts that financial services has on climate is actually its allocation of assets, right? Money matters. And banks decide where that money goes. Who they invest in, pensions decide, where that money goes. So I think fintechs can play a role in helping to be that enabler to reallocate finance, for example, to maybe offset, to your point, their own poor kind of to crunching costs and impacts. And so I think you see a lot of fintechs in there in ESG space, similar to Vested Impact, right? We provide this data to help larger financiers move that money, because we as an individual may not be able to have that impact, but providing that and being the enabler for larger financial institutions to do so will back up. But I think the cross-industry thing is very similar to what Dave mentioned. I mean, fintechs don't own the infrastructure. We're going to need investment into renewable energies. We're going to need investment into critical minerals, and sustainable ones and ethical ones. So I think that is the example of kind of where it has to play from a policy perspective, even at a government level, but also an international perspective. Climate is an international problem. It is not localized, so it's probably going to have to take that level of coordination.
Absolutely. And fingers crossed that is where we can get to, because as Dave says, otherwise the numbers are only going in one direction, which isn't terribly good, positive. So let's hope we can all kind of come together and solve the problem there, and the numbers keep moving in the right direction for when you run this report next year. So that's going to move on to our last story for today, which is that Jamie Dimon charts JP Morgan expansion plans into Africa. The story was exclusively on Reuters. JP Morgan plans to enter Kenya and Ivory Coast this year and grow its footprint in Africa, the CEO Jamie Dimon has revealed. In Kenya and Ivory Coast, the bank will focus on commercial and investment banking, treasury services, and possibly some lending, but no immediate plans to offer asset and wealth management services, which are already available in South Africa and Nigeria. JP Morgan's earlier aspirations to enter Kenya and Ghana in the last several years were previously blocked by regulators, but on Monday, the Central Bank of Kenya said it has authorized JP Morgan to establish a representative office there. In the past, quote, the US government was not very keen on banks expanding into different geographies as this was just after the financial crisis, Dimon has said, noting that the US is now more supportive of international expansion. And then he goes on to say, we want to add a country or two to enter or deepen our presence in Africa every couple of years or so. I don't love that phrasing. It sounds like he just wants to sort of collect African countries rather than like build a strategy, but maybe that's just a bad turn of phrase. What were your thoughts on this, Dave?
Yeah, well, the big global banks and whether they're US or not have always, driven into markets that they wanted to get into. It's interesting that, Africa is obviously an area that, is still a market to emerge a lot into that space. So it seems the logical move into there. JP is still only, I think there are about 100 countries they're in, whereas Citibank are like in 180. So they're a long way behind on where they're operating. What does it mean to go into those countries? I don't know. It's not clear. It's an ambition that he's put out there, but what does that actually mean? Are they in their presence in those areas? Interestingly, if you look at some, Société Générale, who's the sort of big global player, similar, number 3 in France, they're stepping back from Africa a little bit.
Why?
They've announced an exit from 2 more countries that they've already exited from 4. So I'm not quite sure whether that's related to where they are as an organisation versus JP are.
Yeah, is it enough to just be a big bank in these regions, or do you need to do something meaningful when they get there? Like how might they differentiate themselves in that market rather than just turning up, as it were?
Yes, yeah. Well, yeah, it'd be interesting to see what their actual plans are. A presence in a country, what does that mean? What are they actually going to do? What are they actually going to make a difference in that country?
Yeah, as yet, unclear. Kimberley, what were your thoughts? You were nodding there.
I think you kind of nailed it in that, you can't, Africa, even as a continent, we often use the term Africa, but it's not a homogenous continent. These countries are very different. And I'm not an expert on the continent, but I have traveled there in my time with UN, and I think they are also very aware of, to your point, David, big banks can't kind of just land in and hope to win the trust of customers. I think it does come down to trust. There are plenty of local financial institutions. Millions of people are very well banked. So I think economically it's smart move. I think it is an emerging market that has a lot to still emerge. But I think JP Morgan will have a lot of work to do to win trust of that kind of retail banker. I think I read that they were looking at kind of going, well, we'll start working with some of the larger multinationals that are in Africa, and WC and ones like that have large presence there already. So it might make sense. But I think they're not clueless to the fact that it's not easy to win the client base there. And maybe that explains the rhetoric around, we'll just do country at a time, because you can't do it in one. It just replicate. But it's not, there's different languages. There's thousands of different languages in Africa, that alone. That, I think it's smart for them to take it step by step. Kenya makes sense. Côte d'Ivoire, I don't know, but I think they do need to prove and win the trust of the local population and prove they understand their needs. I think to really make it.
Absolutely.
Yeah. Kenya's interesting because Standard Chartered are very deep into Kenya already, so there'll be some interesting challenges there. on that market. But it's obviously it's the obvious start point. South Africa is very mature from a banking perspective, so you wouldn't start there. Whereas I think Kenya is a massive country to sort of go and start to make some.
Well, I guess they
some
did
money
start
on.
in South Africa because they are there already, but they're adding Kenya to it. So maybe that's the
Yeah.
next one.
Yes, I get. I think often people don't count South Africa as part of Africa because it's been so westernized in a lot of the view for a lot of people.
But yeah, the Ivory Coast is an interesting one. They've sort of literally just sort of bookended the sort of east and west coast for, I don't know if that's a geographical choice or, there's more to it that is, beyond my knowledge base. But that was an interesting one because you don't often hear about kind of emerging fintech products and services in that particular region comparative to Kenya and Nigeria.
They'll
and
have
all
some very
those.
different competitors in different places. You think, Standard Chartered are a very different beast to compete against. If you go to Cote d'Ivoire, you're going to be up against the big French players in that space. So it's going to be really interesting how they set their strategy to compete against different players who are very different in their approach to the markets that they play in.
We will see. Ina, what were your thoughts on this? Obviously, they're kind of doing this now, having been shut down previously by regulators who now appear to have changed their minds. What were your thoughts on that?
It's interesting that global banks come into the Africa, and I would select particular countries, because from our observation, we saw a lot of our crypto clients open this market several years ago and actively working in Nigeria, in South Africa, in Kenya, Ghana, in the particular countries. They're not looking at this as the continent. They're looking at the particular countries, and each particular countries. It's important to understand have their regulation and the requirements, and this is probably the reason why JP Morgan particularly selecting countries and started the approach in the continent on country level, because when we see the different requirements, different regulation, for example, in Nigeria, and I think in Kenya, they've got digital documents, which simplify the verification stage, the life of the people in the country, but not in all countries, these digital documents are available. So countries are different. Regulation is completely different. What is necessary to open the account? What the requirements? How is the mail is working? So country by country approach is I think makes sense. And as a market, they've got the competitors. We are working with the local retail banks and fintech as well. So we here in London not aware of them, but there are a lot of it's a huge market, so like a local market. So competitiveness, I would agree with Kimberley. There's like a lot of competition there, but I think it's a good trend that big international banks are going to the regions right now. It means that it's developing in the right way.
No, that's very true. I think I've been slightly disparaging of their actual strategy, but the fact that they are kind of going into this market and investing in it and seeing it as a valuable space and an emerging market for all the right reasons is surely a good thing. Kimberley, would you agree?
Yeah, I think JP Morgan did mention, sovereigns, which are governments, was a key target client of theirs. And I do think, to Ina's point, there is something that a lot of these countries are in huge amounts of debt. They're in debt from the World Bank, the IFC. And so I do think potentially there is a good signal in a large private institution like JP Morgan going in, because when we look at, needing to provide development finance or things into these countries, there needs to be guarantees and securities around us. It's managed well. And I think it's right. I don't know. I don't understand enough about how the multilateral development banks and that kind of work, but I can't imagine that's too bad of a signal, at least at that level of finance. I think for the sovereigns and for the countries, it may prove to be nice to have a big trusted US organization in there that can help with some of those larger multilateral and central bank financing.
Yeah, absolutely. Like, yeah, as you say, like a lot of that kind of boots on the ground relationship building, they're quoted as saying will be with the government, maybe some big government enterprises and multinationals that need traditional banking services. So they're obviously kind of almost as like a top-down approach. This is not a retail banking thing. It's very much like getting involved in sort of almost infrastructure of the country.
Yeah,
right?
you've got to think it's going to bring liquidity into those regions.
Any final thoughts on this one?
Yeah, I think it's an early, and maybe some of it is put out that message that this is our intention to see who's going to come and want to work with them, which countries are going to, get in bed and play with them the most, and so maybe as an ambition statement, it works well for JP. In that they'll see various governments in the region start to come and say, we really want to work with you. We want to see you in our country. And so it actually helps them with their strategy just by starting with a very ambitious statement that they throw out there. It's going to probably help their shareholders as well look at that and see that they have some real strategy of where they're heading.
Well, let's see. We will keep an eye on it. But firstly, Kenya, then Ivory Coast, and then let's see. But we will keep an eye on that one and see how it evolves. All right. Now for a quick look at just one more news story this week that we didn't have time to cover in full, which is that Pocket are going to buy Monese. So this deal is still subject to FCA approval, but it comes days after it emerged that HSBC has written off its stake in Monese, just 2 years after investing $35 million. Launched in 2015, Monese targeted expats and immigrants who typically struggle to get a traditional bank account. However, earlier this year, it booked a £30.5 million loss in accounts filed for 2022 and warned that it would need to raise additional funds in order to continue operating. By acquiring Monese, Pocket says it's creating the leading fintech for the financially underserved and lower middle income consumers across the UK and Europe, serving around 3 million customers. And Pocket will benefit from Monese's regulatory infrastructure, including electronic money and consumer credit licenses and geographic footprint, as well as products, including Monese's multi-currency accounts. So, Dave, what were your thoughts on this? Quick roundup. Is this a good news story in what has not been a particularly positive show till now, apart from Kimberley's research?
Yeah, it's not been a great year for Monese with what's happened from their sort of investors writing off money and things like that. So they're not financially in a great position with the losses that are going on. So this potentially is a good move for them. Maybe, obviously we're not going to necessarily see what the transaction looks like, but you've got to think Pocket are getting a good deal here. For them, it does get a route to getting an EMI license from that Monese have. So, and obviously a route to access to a big chunk of customer base. Where would Monese end up in a few years' time if they just kept on the same trajectory? Are they going to get investment beyond where they were? So maybe this is a good move as a way of shoring up what they were doing. Be interesting to see where the outcome of the two joined up organisations ends up going forward. Is it an asset strip to get some of the pieces that Pocket wants and to get some customer base, or is it actually to come up with a joined up future strategy for the overall 3 million odd customers? I hope it's the latter.
Because they both have like a fairly, joined up sort of vision and mission that would complement each other. So I hope it's the latter. And finally, our "and finally" section is normally where we talk about something more irreverent or lighthearted of the week, but we're not going to do that this week. We're going to do something a little bit different, which is and finally this week is in memory of journalist Steve O'Hare. So condolences and tributes have been pouring in all week following the passing of journalist and founder Steve O'Hare, who died this week at the age of 49 following a short illness. He spent over 10 years at TechCrunch, chronicling the rise of the tech sector and particularly the fintech sector, writing over 3,000 articles in that time, and was well known for his scoops, his journalistic instincts, and not being afraid to pull any punches with his interviewees, often getting the best out of them and the story along the way. He left TechCrunch to join Zap, a commerce player, leaving journalism behind, then eventually started his own business, a communications consultancy called O'Hare & Co., who said this week that they will continue operations in his memory. TechCrunch themselves probably summed him up best for those who are unfamiliar with him or his work. They said, "It is hard to put into words the remarkable talent that Steve was. Born with muscular dystrophy, he spent his life in a wheelchair and had significant health, mobility, and accessibility issues, but he was easily one of the most productive journalists any of us have ever worked with. Steve was a dogged news hound who broke tons of stories. He also wrote grand features, spoke truth to power, and was, quite simply, an original and unmistakable voice. In my experience, that is all completely true. Did anyone on the panel ever meet Steve or were interviewed by him or had their company covered by him at all? If not directly, I imagine if you have been following the fintech space at all, you would have come across some of his pieces, if not in TechCrunch directly, definitely picked up by other publications as a result of one of his famous scoops. Kimberley, did you have any interaction with Steve?
I didn't have the pleasure, and I think hearing what was described of him, I mean, he sounds like an incredible man, and I think incredibly necessary for this, because in a day and age of misinformation and disinformation, true, honest journalism, regardless of who it's kind of rubbing up the wrong way, sounds like exactly the guy Steve was. I think it's incredibly necessary for our own sector to as fintech, right? We've just heard some of the news, right, of needing to hold our sector to account. And it sounds, by all accounts, he was that guy. So I didn't have the pleasure, but I think it sounds like it's an incredible loss to the sector. And hopefully other journalists will follow in his suit and kind of be inspired to also do that, because I think it's for us as fintechs, having a journalist that will advocate for you, like it sounds like Steve did, but that can also hold the sector to account, I think is incredible.
Yeah, 100%. I mean, 3,000 articles over a 10-year period, plus all the scoops and interviews on stage and so on. It would be hard to be in this sector and not have at least engaged with some of his work, particularly if you're an up-and-coming journalist in this sector. Like, I imagine he's, very much the pinnacle that you would want to reach.
Yeah, for sure. I'm a technologist from background and that, and he was largely TechCrunch. There were many more journalists involved in there, but his articles were the ones that really pushed the mark there and really drove home the message that they were trying to do. And I think a lot of it sort of came from his philosophy and his approach on that. It will be a big miss across the industry for sure, but he'll leave a legacy of sort of different ways for people to think, different ways for people to approach the way that they report on technology, on fintechs and other things in that. And hopefully there's a lot of legacy of young journalists who will follow in his footsteps, who see the good way of doing things and the way of really getting to the depth of everything that you want to hear about what's
definitely
going on.
And kind of to Kimberley's point, like kind of digging into the details and like not being afraid to question things at face value and sort of question if this product, service, whatever it may be, is the right thing to do. That's sort of what we try and do on this show. So kind of we kind of digging into the details and not being afraid to ask questions that other people might not. Like that was Steve, and that's also like what we attempt to do on here. So
I think if we even manage to get 5% of what Steve does, then I think we're doing a very good job.
Exactly that. But I mean, like from the very beginning of FinTech Insider, it's just like that is kind of what we're trying to emulate in attitude, not just sort of recreating stories. Anna, did you have any thoughts or memories on this?
Unfortunately, I have no pleasure to interact with him, but like I totally agree with what you guys share, and his legacy will live with the new generation of journalists, and
absolutely. And on fintech, I met him on a couple of occasions. I confess that his reputation preceded him as that kind of dogged news hound. So I was actually quite intimidated to meet him because I thought he'd be quite scary. And the opposite is true. Like, it did him a disservice. Like, he obviously, is a fierce interviewer and so on, but obviously a very nice person. And so one shouldn't, overtake the other. Obviously on FinTech Insider, we've covered so many stories that were broken first by Steve, and he always had the depth of detail. And, as a producer writing this show, trying to put the details together, like Steve's articles were usually the most informative with like the best kind of nuggets that we could use to draw on for discussion points on this show. And equally, in his later career, he would actually recommend companies to us as well, either to feature on Fintech Insider or to tell us about their news, and equally to recommend them to each other to kind of enrich the ecosystem, make connections, use that kind of black book of his. And he was equally an angel investor in many companies that he'd championed through his work, through his journalistic practices as well. And many people have had so many lovely things to say about him this week. Nina Mohanty, the founder of Bloom, spoke about him in that way in terms of like all the things that he did behind the scenes as well as like his journalistic work, and so many others as well. So a massive loss to the industry, but a huge legacy that will live on. Obviously our condolences to his family and friends and colleagues. And so that wraps up this week's Fintech Insider News. Thank you so much to my guests today. Where can people find out a bit more about you and your companies? If we start with you, Kimberley.
So if anyone is interested or in need of ESG or sustainability impact data, either for your assets or your companies, you can check us out at www.vestedimpact.co.uk.
Thank you. Inna?
So you can find us on sumsub.com. And in LinkedIn, if you want to know more about this initiative which we launched last week, it's greenflag.me. We have an amazing video and pretty lovely landing page there, and when we try to share our ideas.
Thank you. And Dave?
Yeah, you can find me as Dave Morris on LinkedIn, and then all over the various bits of content at 11fs.com.
Brilliant. And as for me, pretty similar, Laura Watkins on LinkedIn, obviously on this podcast and at 11fs.com. Thank you so much for listening. If you like what you've heard, please follow our podcast and don't forget to leave us a review. It helps us make a better show and helps others to find us. If you're listening on Spotify, you can now drop us a comment and tell us what you thought of the show. And as always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider and you will find us on most platforms, or email podcast@11fs.com. We also now have a brand new WhatsApp community channel where you can get the inside track on all of our content. And you can get involved via the link in the description below. Thanks very much and goodbye.